Very good morning to you, Kunal. Good morning to you as well, Shaina. Thank you so much for joining us on the show once again. This one is coming from Satya, and Satya wants a view on L&T Finance. Actually, it's a short-term view, so let me skip that. Let me instead take a longer-term view. And this one is actually coming in from Gauri. He wants to know about Dixon Tech. 40 shares at a price of 13,600 rupees per share. Shaina, what's your take coming in on Dixon Tech? What should Gauri do given the fact that this one is seeing a very sharp rally, although manufacturing plays are seeing a sharp rally on back of what is exactly happening when you talk about the US election, which side it is tilted at this point in time. So what's your take? Do you think now is the time to book profits in Dixon Tech or stay put for getting some more better returns?
I would say it's an extremely expensive stock on pure valuations, but the momentum seems to be continuing, especially on back of the results that are coming in from the US, and it's China plus one type of manufacturing that's likely to keep the stock in limelight. So I would say you can continue to hold, but keep a strict stop loss. I would give a stop loss, a deep stop loss, something close to about 13,500.
All right, then that's the take coming in on Dixon Technologies. Moving on to the next query there, and this one is coming in from Satya. And Kunal, he wants an advice on L&T Finance. He wants a view in this one. What he's saying is that is it advisable to switch from Poonawalla FinCorp and M&M Finance to L&T Finance till next Diwali, because he's been holding Poonawalla as well as M&M Financials at a 10 to 15% loss. So will this switch make a sense, and the next 1 year view as well?
So I think it's a tricky one because frankly speaking, all three of the charts are showing a bit of sluggishness for themselves. Poonawalla FinCorp, of course, the stock has recovered quite well in the last 1 week or so from a very sharp 15% odd correction, I think, if I'm not wrong, on the day of the results for the stock. But I think from there, the stock looks to be into a stable territory yet again. What it means is also that the stock is establishing a base closer to 400 mark. M&M Finance is the only stock where the chart patterns are a lot more concerning, because the stock did not participate on the way upside when the entire financial services pocket was moving up higher, and then it was one of the first ones to try and see the selling pressure and correct back towards the sub 200 moving average. So I would probably believe that it's a tricky one. L&T Finance is a top quality name in that sense. Poonawalla FinCorp, of course, the stock is also one of the better performing stocks on the longer term basis. So I think maybe switching from M&M Finance and having Poonawalla FinCorp as well as L&T Finance could be a better bet.
All right, so that's the take on all these counters. Moving on, and Shahina, the next query is from Kaushik Mitra. His query is it a good price to add Vedanta at current market price, or would you suggest to make a fresh entry in NTPC? So he's basically confused between Vedanta and NTPC, which one to go for at current market price.
Both look okay at current levels, but I think NTPC looks better given the fact that, there is some M&A also that is happening out there that could, give the company more cash on his balance sheet. And growth is also coming strong. So I would prefer, but Vedanta also does look good. So, I mean, you can take a position in both. Metals is doing well, likely to do well. So, because I think China, they may come up with a good stimulus package, especially if Trump comes in office. So to that extent, both look good. You can divide between the two.
Current market price, both of them do look good. Moving on to the next query in Kunal, this one is on Tata Power. When Bharadwaj is holding 1200 shares at an average price of 366 rupees, can he go ahead and buy more at current market price? His view is to stay invested for the next 2 to 4 years.
It's a good price to look at Tata Power, because it seems like the stock has come back to the lower end of this mild trading range the stock has been going through. 430 to 40 has been the support for Tata Power. Now the upside, I think, closer to 460 to 470 has been a resistance. So it's been stuck into this 30-40 point band for the last few months, and that's a good sign, because when stocks don't participate in the heat of the market volatility and remain into a range, these are the kind of stocks which eventually see a breakout for themselves. So would be bullish on Tata Power, and I think since you've bought at lower levels, you can look to accumulate a few more.
On to the next query, and this one is from Jude and Shahina. He wants an advice on Shriram Finance. Would you suggest a buy at current levels, and how do you look at the fundamentals in the next couple of years?
Is one of the best placed in terms of the NBFCs, and also the most I think I would say it's the most attractive in terms of valuation, also on a price to book basis. So yes, I would be a buyer in Shriram Finance. That would be my top pick in the overall space.
The take coming in on Shriram Finance, the top pick in this particular financial space. But with this, it's time to step into a very short break. Viewers, don't go anywhere. We'll be right back and we will be taking more of your stock related queries. Stay tuned and keep writing to us.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of the stock related queries then. And this next query that I have is coming in from our viewer. That is Vidya, and Vidya wants to know about Titan. She's holding Titan at an average price of 3,340 rupees per share. She's in loss. Is it time to average Titan, or will it go down further? Kunal, she wants your view. I wanted to take Shahina's view on it, given the fact that Titan has come out with the numbers, is reacting to its numbers. The viewer has asked your view on the charts, but nevertheless, I'll take both of your views coming in for Titan. Kunal, you go first.
So, I strongly believe that the stock is a top quality name on the long-term charts. However, the near-term charts for Titan has, been a lot more tricky, because, what we've seen over the last 2 years for Titan is that the stock has been unable to break past about the 3,800 mark, 3,850 levels approximately. So, we've seen this level being tested twice. One, I think, is in 2023 second half, and the recent one was just about 2-3 months back. The stock has been unable to break past about those levels. The concern for the stock now is that it's on the verge of a break below its major support, which is around the 3,000, 3,050 levels. So this could probably dampen the sentiments further for Titan over the near term. My suggestion is that wait out for maybe another few weeks, before the stock or the selling in the stock settles down, because there could be a possibility that the stock may provide a break below the 3,000 levels before it tries to get back into a recovery mode. So I think buying the stock on the way when the stock recovers could be a better strategy if you're a long-term investor.
All right, then that's the take coming in on Titan. But the next query, once again, Kunal, I'm coming to you because this one is on Exide Industries, and Gagan wants to have a take on this one. Is that hold or sell? Since he has bought the shares at a price of 350 rupees, he's still at profits in this one. But how do you see after the sharp correction that we have seen in Exide?
So yeah, the recent correction was very sharp for the stock from I think 575 approximately. The stock had corrected towards 450 levels where it's trading right now, but it's now retraced back towards its 200 DM, and I think that's the positive sign for from a longer term play. Since you've purchased at levels of 350, you're still sitting in profits. I would suggest to continue to hold on to the stock. If there is a possibility, and depending on your portfolio construct, I think averaging out at current levels close to this 450 mark could also be a good strategy for Exide Industries, provided you are a long-term investor.
All right, let's go on to the next query that we have then, and the next query that I have is coming in from Ravi Kant, who is just 21-year-old student who has MCX one share at an average price of 6,444 rupees per share. Not exactly asked what should he do with the stock or not do with the stock, but before I come to you, Kunal, on MCX, let me take Shahina's view on Titan. Shahina, I believe you did not give your view on Titan, and I believe also you were happy that you were not to speak on this counter, given the fact the stock is slumping in trade, 5% downtick coming in, almost 3% downtick coming in on today's trading session. When you talk about Titan, given the fact it is reacting to its numbers, what's your take coming in for this one? Fundamentally, where is Titan headed?
Well, see, on the top line front, it was a good number, but there were negatives. One is that the guidance for FY25 has been brought down. Two is that the margins were impacted by the import duty cut that affected their sales, inventory sales. But to that extent, margins were impacted. The problem here is that it's a very expensive stock in terms of valuations on PE basis, on almost all parameters. So what happens is any small, any small factor which is not liked by the market, the stock corrects. So I would not be adding Titan currently. I would wait till it settles and then add. Of course, in the longer term, it is one of the best managed stocks in the companies in the sector. So you can add, but not at current levels.
All right, that's the take coming in on Titan. That's the fundamental view coming in. Let me get back to the query on MCXN. Kunal, like I said, he's a 21-year-old guy. His average price, buy price for MCX is 6,444. Actually, it is his buy price because he only has one share of MCX. What should he do?
I think you should hold on. And my sense is that you're looking to play this from a longer term play, medium to longer term play. I think it's a quality stock. Yes, the stock has run up exceedingly high in the last 2-3 quarters, but then I think that's generally a hallmark of stocks which generally break out on long term basis. So I think at current levels, also 64, 50, 70 levels where it's trading right now, I would suggest to hold on to the stock, and especially if you're a medium to long term investor.
Just a quick note, given the fact that it is very heartening to see that you have a 21-year-old who's actually put in money into the stock market. Nevertheless, it doesn't matter that he's taken 1 share, 2 share or 3 shares. At least I'm hoping that this is because of the awareness of the stock market, is not because of instant gain that the stock market is providing you. Isn't it, Kunal?
Well, absolutely, yes. And I think, this wave of the market over the last 3-4 years has attracted, both kind of, investors, new breed of traders as well. So I think if you stick to quality, if you stick to the discipline, you stick to the, the principles of, market, I think there's a long way to go ahead. And, these bouts of volatility, what you've seen in the last 1.5 odd month, these are part and parcel, when you look at this over the last 20-25 years of the market history. So I think in that aspect, it's a good strategy that you've started off, but I think build on to more quality names and keep focusing on more quality stocks. I think that should be the better path going ahead.
Well, certainly great to see that the students are also getting into the stock markets in a good fashion. But moving on then, and let's get back to the other query then, and this one is coming in on Heritage Food. And Shahina, let me have your take in this one, because Bala specifically wants your take for this counter. Wants an advice, is this a good stock to enter at current market price with a 1-year investment horizon?
I personally also have invested in the stock, and so I do believe in the fundamentals. Valuations are extremely, very attractive, and it has a lot of projects on hand in terms of expansion. Its product portfolio, they're adding new products. So I would be a buyer for both the shorter term as well as the medium term, long term.
Right, this one is coming from Anime. She has about 2,000 shares of IOC, which is purchased at 120 rupees per share, 4,000 shares of IRFC at 40 rupees. He wants to know what should be his time horizon to remain invested. Kunal, on the charts, any time frame that you can advise him to remain invested in these counters? Because they are PSU counters, while IOC also is very dependent on what happens globally. When you talk about the crude oil prices, you see a lot of fluctuation in stock price based on that as well.
Yeah, so the only catch over here, of course, as you mentioned, is the fluctuation in crude oil prices, because that determines the trends for stocks like IOC over the medium to long term. So I think that's the only concern for the stock price trend. And looking at the recent last 3-4 months of price correction, it looks like that the stock is at the brunt of one such phase where it's getting affected by the movement in the crude oil prices. But I believe that, again, I think IOC is a top quality name, and since the stock has come back towards a multi-month low at current levels of 140 approximately, it could be a stock which you can consider buying. IRFC, on the other hand, I am, my sense is that the stock is extremely, bullish on the longer term play. Yes, there was a point when IRFC moved up, I think 10x or 8 to 10x in a span of the last 2.5 odd years. This correction which you've seen from 225 levels to 150 thereabouts for IRFC, I think also is an indication that the stock has completed a major mean reversion phase. If you're asking me for holding on to the long term, I would believe having a time frame of at least 3 years further for both of these names could be a good time frame from a long term play.
Alright, so that's the take coming in on IOC as well as IRFC. But today we have a truncated version of Buy Now, Sell Now, because it's Wednesday and we have a special segment of Women's Wednesday where my colleague Kavita would be in a conversation with an expert to talk about how should one go ahead and invest in the market, make smarter investment decisions. So we'll come to that post the break. But thank you so much, Kunal, as well as Shahina, for joining us on the show and resolving all the viewer queries as much as we could at least take in this short edition. But for now, we'll slip into a break.